Look at that.
Good start.
So the floor is yours. This is it. And
Well, I'm kind of humbled here today because I'm the first person that's presenting that has not built anything. All the people that presented before me make my job easier, and I think most of you do. As it was mentioned, I am a writer and a publisher of the Financial Brand. We're a digital publication that reports on the financial services industry with a specific emphasis on retail banking and what's happening in the retail world. And so what I'm going to be doing today is sharing what we're seeing in the marketplace, which is just reporting or re-reporting what some of the people have already presented today from Location and M-Bank and Simple and all. And I'm going to talk a little bit about from bricks to clicks, the integration of digital within the branching and within the customer experience. We used to think of the millennial or the digital consumer as being a millennial. And what we're finding very quickly is that while most millennials are digital consumers, not all digital consumers are millennials. In fact, most of us here are digital consumers. I see that besides myself, there's other people that are using Twitter and use Facebook and use LinkedIn to communicate. But every one of your employees are probably on the internet on a daily basis, on a social media or on a digital media basis. And I think we have to remember, because sometimes we categorize in our mind and we're talking to the digital consumer, we're thinking of the person who's always on the digital device, like my son. He's 17 years old, and we were talking about it last night over dinner that, number one, he never talks on the phone. You can't get a hold of him. He won't answer the phone. But if I text him, he'll get back to me immediately. I can't track what he does. I can't track who he talks to very well. But it's interesting because about 3 days ago, he was writing a thank you note to a university he visited. And he had to ask, how do I address the front of the envelope? He's 17 years old. It's not like we sheltered him, but they have not had the needs to do that. We used to write letters to people all the time. In fact, that's how you used to court somebody. You'd write them letters. So the digital consumer is everybody, but it has changed significantly. The digital consumer is digitally engaged. There's thousands and thousands and thousands of smartphone owners. It is unusual for you to ever see, except in a banking conference sometimes, a flip phone. It's interesting how few of those still exist. In addition, over 50% of people do online shopping on a digital device. How many of you have shopped using your mobile phone? Yeah. And the reason is because it's simple. To get back to Josh's comment, if you make it simple, people will do it. Videos are doubling year to year. One of the things we're emphasizing with our retail banks is to make sure that you build videos about how to use your products, but make sure those videos can be viewed on a mobile phone, not just on a computer screen. The digital consumer is also highly informed. 63% research their products online before they go into the branch. So when you used to have it where the person came into the branch to do the shopping and would go from one corner to the other corner to the other corner and asking, how can I get the best product? This is all happening digitally. So by the time they come into your branch, they've already made their decision as to what they're going to be doing and who they're going to be buying from. In addition, the majority of consumers, and these numbers I'm sure have gone up since we built the slide, want customization. They want personalization. They no longer accept the fact that you don't know them. We were talking again last night about the fact that the silos continue to exist. Why is it that when I go into a branch and I have a problem on my personal account, they don't know that I also have a small business account? When Amazon knows everything I do and what I buy. The digital consumer is socially active. 20% engage on the social media via their, 20% of the PC time is spent on social media, 30% of mobile time. Banking integration of social products. We're seeing more and more banks now looking to integrate their banking products on social media. Facebook banking is a term that has come up recently. 72% trust engagement that they get on the social channels. Unfortunately, 30% trust ads. In other words, I would rather hear from my friends what they think about your bank than your bank telling me what to think about. Digital alternatives. 72%, according to Accenture, 72% of consumers are willing and able to bank with a non-bank. And we're seeing this over and over again. Now the concern is, how do we build that integration? How do we make it so that they can bank in the way they like to bank with a non-bank, which usually, again, it's not that they're looking for a non-bank, they're looking for simplicity. They're looking for an easier way to do banking. And I think what happens is we get Mikhail, we get other Josh up here, and they talk about all they've done, and we all sit here and shake our heads and think, this is really cool stuff, but where do we start? One of the things I recommend to banks is the place you need to start is to simplify the processes. Instead of getting in meetings to talk about what we can add to the mobile platform and what we can add to the mobile experience, why don't we talk about what we can take away to make it simpler? One click. One of the things I love Square Cash. Square Cash is, I'm not even sure if it's overseas, but Square Cash is a one-click payment system. I pay my person who does my driveway for plowing. I pay the person who cuts my lawn with Simple Cash. Why? I say, here's what I want to pay. Here's the one button I push. And oh, by the way, that's integrated with my address book. How many of your banks, if you want to make a payment to another person, allows the person to use their address book as a list of who they want to pay? There's one proud person. Oh, there's a couple. Okay, there's a few more. But she was raising her hand before I even asked the question. Because I do that. That's good, but we make the process so difficult. Wells Fargo, a very advanced bank for me, unfortunately, makes me do so many things. I have now written more checks in 2015 than I ever have before. Why? I'm writing to myself to transfer money between one bank and another bank because the process is easier when I write a check and take a picture than it is for me to transfer funds. Testing the waters. While we talk about all this great stuff, unfortunately, consumers still are only minorly engaged. They're engaged in basic transactions, checking balances, doing deposits, once in a while doing a transfer of funds. We've got to move them further down that learning curve. By the way, just so you know, my presentation will be shared. As I see all these cameras clicking, and I know you're not taking pictures of me, these slides will be shared. I hope you're not taking pictures of me. They're time poor. People are rushing everywhere and are multitasking. And because they're time poor, again, I'm going to keep on getting back to what Jim's going to talk about later this week, tomorrow, simplicity. Make it easier to do banking with you. In addition, they are price sensitive. They're going to look for the best deal, but with a value transfer. So it's not the cheapest, it's the best value proposition. So at MBank, their digital branches, when they go into a shopping mall, they're going into their branch to get digital coupons for that mall, but they're also visiting the branch. What's good about that is it gets traffic, which is one of those things we're all struggling with. Security conscious. It's an interesting dynamic in that the older consumer is very security conscious as to what they're willing to do online. The younger consumer has so much trust in the smartphone, they think it's all okay. So one of these things are going to blow up on us, and Apple Pay is going to help with the whole authentication, and other banks are getting more and more in digital authentication. Fastest growing group of internet users are the senior surfers. My father, 10 years ago, was on the internet. I get worried every time I see one of these spam things from a bank because I get concerned that I'm not too sure if he's as aware of what could happen. But I think we have to realize that it's all ages we're trying to address. Customer expectations are not being set, believe it or not, by these great banks we saw earlier. They're being set by Google, they're being set by Amazon, they're being set by the travel companies, by the hospitality companies that are doing extraordinarily well at integrating channels and making people aware of what they can do with the digital information. I did an article yesterday for the Financial Brand about big data, and my co-publisher said, "Geez, I hate the word big data because it sets a lot of banks apart. They have to deal with the small data first." The reality is we've got to deal with what we have at our disposal. I brought up earlier the whole issue of me going into a branch as a single retail consumer and the branch not knowing that I have a small business account is unacceptable to a consumer that says, but these other organizations know everything about me and they apply it. So we've got to go further down that line. Experience must be personalized, rewarding, and engaging. I like to quote a bank that I was familiar with that used the term, know me, look out for me, and reward me. And that does not mean reward in the traditional sense, but it means if you know me and if you look out for me, that's rewarding, but continue to give me that reward. We had a couple banks recently, Bank of America is one, and a number of banks are now starting to build relationship rewards. In other words, they're looking at ways to build rewards around the overall relationship. That's going to be expected. If you know the consumer and you're trying to engage with them, they're going to expect you to provide them for something for that relationship. Uber does, everybody else does. I have more point programs than I don't know what to do with. Unfortunately, they're going to expect that from the banks as well. Banks must engage. I love the terminology. We love cliches. Within about 2 years, we went from multi-channel to omni-channel to integrated strategy. I really believe that what we're looking for is opti-channel, the optimum channel for each part of the transaction. In other words, what we're looking for is the ability to say, what is the best channel to deal with what you need to deal with? If I have a complaint with the branch or with the bank, the mobile device is probably not the best way to communicate. Okay, but I do think that a computer program or a computer screen with a visual with the person may be the right way to go, or the phone. So give me a click to call. If I have a problem, give me an easy way to push a button and get a hold of who I have to get a hold of for my challenge. Deliver seamless mobile payments, and this is, it was funny because the people from Efma said, don't deal with just the basics. Well, this is not just the basic in that it's not just dealing with seamless payments, it's making it so that the payment process is integrated within the app. What we're all looking for is a way to get our bank's app on the front page of the person's mobile screen. And until we integrate with other programs, we're not going to do that. Look how well Starbucks is not a payment organization. But if you go to Starbucks, 3/4 of the people go in line. I'm not a coffee drinker, and I'm amazed. I will sit there and watch. Everybody brings your mobile phone up and does a payment. Why can't we make it so that if a person wants to make a basic payment, we make it that simple? We have to think outside the box. We have to look at industries other than the banking industry for ideas and innovations and the way that they're doing things. Maybe not do it the exact same way, but why has that payment process been integrated so strongly within all the consumers that go to the bank? It's simple, again. Mobile-first design platform. This is moving, and from a mobile-first design platform, digital strategy, it means start thinking about how people engage on their phone or even on an ATM screen and try to make it so the overall banking relationship is done in the same way. So what we're trying to do is make it so that, again, what's the simplest way we can make things look and feel? Wells Fargo, again, one of my banks, gives me everything on my mobile screen. However, I probably do 4 different transactions on a continuous basis. Why have they not learned from my transactions and built a better way for me to engage in the few ways that I engage with the bank? Oh, by the way, I have no problem going one step deeper to do more with them, but I don't need my investment balances. I don't deal with that on an ongoing basis. Oh, by the way, I do need person-to-person transfers, and I've got to go through 4 steps to get to that step. And with Wells Fargo still, I can't see my balance before I sign in. New technologies, continue to test new technologies. This is not that new. This is Combank and their integration of the ability to look at mortgage or prices of homes with technology. And I think we have to look at everything. We have to look at the different things that are out there. And I always talked about innovation roulette. And the reason I use that analogy is if you've ever been to a casino, there's a big difference between being over there and having people at the roulette wheel screaming over there. That's disengaged. People, when you get around the table, you at least see how the table's flowing. I realize it's a thing of chance, but anybody who's been in a casino realizes there's a flow sometimes. So if you get to know the flow, and in the banking world, what that would mean is get close enough so you can see how the people are failing and succeeding, you're going to be better able to make the decisions and place small bets. Place a lot of small bets. To place a small bet and fail is better than never betting at all, because you'll never win. I know McElbert quite well at MBank, and I will guarantee you, we've talked about probably as many failures as we have successes, but they innovate quickly. And what's kind of nice from a marketing perspective, it allows you to bury those failures before they get to be known throughout the organization. He's smiling over there, because we all know that if you can get a lot of things going on and a couple of really big wins, people completely forget about the small losses. Access to insight. The ability to have voice banking. It hasn't taken off yet. However, one of the most successful strategies for voice banking has been done by USAA in the States. USAA, for those of you who aren't aware, is an insurance company that does banking products for veterans. Can you think why voice banking may be very effective at USAA? There's a lot of people that are their customers don't have digits, that aren't able to transact in the typical way. So they said voice banking was very important. The people that use it, they said, there's not a high level of people that use it, but he said the people that use it all the time. It's an engagement strategy. So what do you want to do? You want to look at other chances. Wearables, it's funny, this slide, the location being spotlighted, used to have Google Glass. And it was interesting because they showed the Google Glass earlier this morning, and there was already somebody tweeting, goes, what's Google Glass? So again, you have to test different options. I will say that Location does a really good job of getting early in, and they'll get early out. But they've learned in the process. And I'm sure that their engagement with Google Glass helped them with regard to other wearables. I don't know where wearables are going to go, and in many banking conferences I get asked, should we really get involved and engaged in wearables? I'm going to say there's a lot of priorities before that. We haven't really built a good value proposition for wearables. So for those of you who say, geez, do we have to get in it? Maybe not. Be aware. Opt to channel support, as I mentioned. Let's make sure we give them the best option for how to get support going forward. So the optimum channel, as opposed to omni-channel, multi-channel, integrated channel. So let's find the best option, and let's integrate our digital with our physical. The key really is to find a way to bring the digital aspects of the transaction to the physical world. How many of you have the ability to open an account online using a photo of an ID as a starting point? Maybe about 4 of you, 5 maybe. How many of you have taken that technology and that process into the branches so you use the exact same process in the branches as you allow people to do mobile? And most don't. Yet the benefits are, if you're able to take a picture of an ID, you not only have gotten good authentication, but you've also gotten perfection. You've made it so the mistakes aren't made. How do we expect the consumer to buy into the digital things that we're trying to have them do when the branches aren't being given the same tools to simplify their process? How many of you also have if a person opens an account online, has a separate, what I'm going to call branch for the online openings or mobile openings than you do for a digital or a physical facility? In other words, if I came into a branch and open an account, it goes under one accounting system or accounting head, and if it opens mobile, who keeps it in different branches? If you understood what I just said, maybe not. I made it pretty confusing. Overall, most banks that we're familiar with, if you open an account online or mobile, it's not given the same credit to the branch as if you open a physical facility. In other words, the branch doesn't get credit. So if a person comes in with the transaction halfway done on a mobile or online device, they will start from scratch because the bank usually gives credit to the last touch. And so we've actually built systems that make it so that we show a lower than normal average account opening on a digital device because the branch is basically incented to break that apart and start it over again in the branch. So unless we fix that, unless we build the engagement at the branch level, it's going to get more and more difficult to build in the consumer's mind. Make sure you continue the innovation processes, BBVA. One of the first, and not anywhere near the only, innovation labs what's interesting is we're finding that Capital One and a number of banks, BBVA and a lot of banks internationally, are now showing up at technology fairs to invest in, as a venture capital company, some of these new technologies. What a big step it is in the banking world, which I've been in for a long time, to actually look and say, buy it rather than build it. I thought it was amazing that Bank of America decided to build or to buy a rewards program from Cardlytics as opposed to building it themselves. They said it was faster to market, they didn't have the same challenges they have internally. But when a bank like that their entire history has been about building it themselves, to buy it, for Capital One to be, I think they've invested in 20 new initiatives this year alone to test the waters and hopefully get on the ground floor on some of these technologies. So what will banking look like in 2020? Number one, the unbanked or underbanked will be profitable. We'll find a way to make it so that we can validate the profitability of the consumer that in many economies is thought to be a throwaway. It's too big of a market to ignore. Bank account is your phone. Not for everybody, by the way. Not for everybody. Branch will support digital as opposed to the other way around. As AmBank has found, digital is the foundation of everything, but they still believe in branches. Digital will generate revenue. We continue as an industry to give things away. We always think that free is best. There's a couple of banks that we're familiar with that are actually charging for mobile deposit capture based on how fast you want these funds to be transferred. And everybody's concerned about what the charge is. Those banks that have done that have not seen any drop in the volume as a percentage compared to other banks, and they're generating revenue. So in other words, what they're doing is, if you want your mobile deposit made in 3 days, it's free. You want it in 2 days, it'll be this price. If you want it deposited today, it's a higher price. Once a person's engaged in the deposit process, they're not checking on those prices. Because if you're depositing a $600, $700, $800 check, and you're only being charged $1 or $2, it's less than an ATM fee, but it's generating revenue. An offer that I've made for the Efma attendees, basically we just publish a report. I also am a publisher of Digital Banking Report. What we have done is we've published an 80-page report on bricks plus clicks. And what we have done is, in this publication, we've talked about what's happening worldwide in the integration of digital within the branch. So how are banks worldwide taking digital aspects of banking, ranging from cash counters to video ATMs to video advisory services, and how are they putting it within the branch? And then we show, I think we have 16 pages of just visual elements to kind of get the mind going as far as how are banks taking the digital aspects of what they're doing and putting them within branches. Maybe it's a line of ATM screens. It's a design manual as well as a integration manual. But if you, I think Efma's also going to send an email, but it's an 80-page report that's valued at $495, and we're going to be providing to each of you for free if you download it. So that's it. Thank you.
Have a seat. Can you come back on the slides from the presentation? Thank you. The previous one? The previous one? Thank you. Was it on purpose that you wrote banking will not look very different rather than banks will not look different?
Banking will look very different. Is an ability to, from our standpoint, from a writer standpoint, to refer to banking as opposed to banks, because we have credit unions, we have insurance companies and others. So we use the word banking rather than bank.
Not because you would think there would be no banks anymore, but just new entrants.
Yes, correct.
Okay,
yes.
That's good. Okay. Do we have questions? I think every slide should generate a lot of questions. Thank you very much for this wrap up. Is this, it's not a US perspective, right? It's a worldwide thing?
Yeah, we're actually, we're second to the American Banker as far as readership. We have over 3.5 million readers a year, and we're number one globally. And we touch all parts of the globe, but we a lot of our emphasis is on the U.S. because we have a lot more emphasis. We have a lot more ability to get around there. But we have featured, as I've tweeted out today, several articles on mBank and Location and other organizations as well.
Okay, do we have questions? No, we don't. One of the figures you wrote in the first slides was 72% is willing to bank with a non-bank. It made me think a little bit like, will you leave your bank because you're not happy about that thing? And a lot of people would say yes, but in reality they don't.
Right.
So how much do you think people will agree to bank with non-banks? And that leads us to new entrants, threats, whatever. You know, where's the limit there?
I think the security overall is going to be with their traditional banking environment